Well, hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, we'll be talking about the US inflation print and the Fed's rate hike trajectory. And of course, we'll also be discussing the market trends and the stocks that will be in focus in today's session. Well, we'll also have your queries answered by our technical expert on the show. So please keep commenting on our live feed and we will have them addressed by our experts. But before we get all that on board, let's take a look at what the headlines are looking like this morning. Well, Wall Street ends mixed as persistently high inflation print for January keeps investors on the edge. The hotter than expected inflation data heightens fears that the US Fed will keep rates higher for longer. Asian markets take cues from US peers to open lower. The SGX Nifty indicates a negative start for the Indian markets as well. And stocks in the limelight today. Apollo Hospitals reports an operational miss in the third quarter. A soft quarter for Bata as well as its earnings fall short of street expectations. Oil and gas giant ONGC also records an all-round miss. We'll talk about all these stocks on the show today. Well, we're now joined by Geoff, independent emerging markets commentator, to discuss the US inflation print that came out last night. Well, hi, Geoff. Good to have you on the show. Let's talk about the US inflation data that was, reported last night. Well, the Fed has already indicated that rates will remain higher for longer. And given the fact that inflation has remained hotter than expected in the last month, how many more hikes do you foresee going forward? In fact, the fact that Fed has already indicated that rates may remain higher for a longer period of time. Do you expect the terminal rates to settle around somewhere around 5.5% or thereabouts now?
I still think we're looking at two more rate hikes, taking us to just over 5%, 5 to 5.25%, which of course is what the Fed's dot plot is telling us at the moment anyway. I think what the two recent pieces of data that have been perhaps a little stronger than people wanted to see, which was the payroll employment number recently, and also today's CPI, although I don't think today's CPI was bad, as I'm sure we'll discuss. I think what that has done, or those data points have done, is to make it less likely the Fed will cut rates later this year. I frankly never believed the Fed would cut rates later in the year. And I think, frankly, the most important thing here is to work out how much more the Fed's going to raise rates before we start thinking about cutting rates. So my sense is that there's another 50 basis points to go in two 25 basis point tranches. And then the Fed's on hold, I think, unless, of course, the economy's a lot weaker than anticipated, with probably the first rate cut not happening until 2024.
Right. The consensus now could be that, it's the second half of 2024 when we could see rates come down. In fact, rates will remain higher because after the two hikes you mentioned, there could be a long pause when it comes to interest rate hikes. But when it comes to the inflation target, Powell is not budging when it comes to the 2% target that they had already outlined. The markets have managed to take that in their stride, because S&P 500, if you look at that index, it's up over 8% from its October lows. And even last night, markets ended pretty flat, even though they were, in the red when the inflation data was released. Where do you see the US markets heading amid all the macro data that is being released? The jobs market remains hot, US CPI remains hot. So where do you see markets heading in the coming days?
First of all, let's try and interpret what happened today. I think today was a relief to the markets in some sense, because there was a lot of talk that it would be a bad number. The whisper number, if you could have a whisper number to, macroeconomic data, was that it would be a negative surprise. It was a very complex number as well to analyze, because you ended up you've got seasonal adjustments, change in weights. And so I think the fact that the headline at 0.5 and the core at 0.4 was very much, I think, in line with expectation. And the year-on-year rates are a little different because of the adjustments to prior data, but the actual data was in line with expectations. So I think that partly explains the good response, or at least the balanced response you got from the market. Now, I continue to be constructive. I'm buying every dip there is out there, and I do think markets will go higher. And the reason for that, frankly, is that although there was some disappointment about the fact that inflation didn't come down as much this month as previous months. Nonetheless, the momentum of inflation on a month-by-month basis, not 1 month, but 3-month annualized, 6-month annualized, has come down a long way. We've got 4 of the next 5 months on headline inflation where the base effects are very, very beneficial. So I believe inflation in the US by the middle of the year will be around 4, maybe 4.25. And by the end of the year, we'll be closer to 3.5. And so I don't expect the Fed to have to do much more. And in that event, I think the market does well here, especially as I think although bond yields have risen recently, they're well off their highs. And I think basically they're in a trading range, possibly going lower from here down the road. So I'm quite constructive about risk assets.
Right, quite constructive on risk assets. Also want to get in your view on the dollar. It has risen from a 2-week low after yesterday's CPI data. And when it comes to the Indian markets, I also want your view on that, given the fact that foreign investors have been pulling out funds from the Indian markets and parking it in other emerging markets like Taiwan and South Korea. What's your view on Indian markets? How does it stack up versus the rest of emerging market pack?
Well, first of all, on the dollar, I think as people have become a little bit more concerned about what the Fed may do, I think it's logical the dollar's bounced a little bit off the bottom. It had a big sell-off, of course, and in close to 10% from the peak in the autumn of last year, and then it's just come off the bottom a little bit. But I think the trend here in the dollar is still going to be towards flat to slightly lower over the course of the year, which I think will encourage money to come back into the emerging markets, taking the year as a whole. Right now, obviously, the emerging markets have been under a little bit of pressure recently, but that will eventually turn, I think, once the dollar starts to move lower again, as we get still closer to the end of the Fed hiking cycle. Now, the problem India's got, I think, is one simply of high valuations, a market that did very well last year compared to markets such as China and Taiwan and Korea. And I think there's therefore some rotation back into those markets, particularly with, of course, with the China reopening going on, although I suspect that's not going to be quite as bullish for the economy as people think. Korea and Taiwan both did poorly last year, so I think there's some rotation going on. But I think what's worth remembering about India is the Indian inflation problem. The Indian inflation problem has not become as serious as many other emerging markets, at least so far. The RBI is raising interest rates, which is right. Real rates are higher than in a number of markets around the world. And so I think as long as the dollar continues to fall, I think the rupee will be reasonably stable from here. And I think eventually the FII data, the FII flows will come back. But right now, at the beginning of 2023, you're seeing an almost inevitable rotation from one of the big winners of last year, India, to some of the big losers, which are China, Taiwan, and Korea.
Right, Geoff, that's the view on India coming in from Geoff. Geoff, thanks a lot for taking out time and joining us today. We look forward to having you on the show once again later sometime. Well, moving on, let's focus in on the technicals then. Joining me is Shivangi Sarda of Motilal Oswal Financial Services. Good morning, Shivangi. Good to have you on the show. Just want to get in your view on the Nifty. Well, yesterday we managed to shut shop above that 17,900 mark. Even though today the SGX Nifty is not giving some positive signals, do you expect the Nifty to defy the global trend and maybe break above that 17,960 range that it is struggling to do for quite some time now?
Good morning, Nandita. Thank you for having me on the show. So yes, definitely the bulls have been, making a very good comeback. Yesterday, we saw that the crucial levels have been surpassed. Index was trading in a very narrow range from the last, 7 sessions. And, we are yet to cross the budget day high, which is around 17,972. So the bulls are back, but then again, due to the global market weakness, we might see a soft opening, but then overall the setup is quite positive and we would see a upward trigger. The FII's long short ratio is also, improved to 26-27%. which is quite positive, which was trading in a very lower range of around 17 to 18% from the last few days. So all the triggers are very positive. Technically, if we talk about the chart, it has come out of its very narrow range of the last 3-4 sessions, and weekly it is also holding up to its higher levels. So of course, technically and derivative wise, the setup is quite positive. Put call ratio also improved to 1.03 levels. So any dips could be utilized as a buying opportunity, and we could see levels of 18081 zones and then 18200 levels in the index. And talking about Bank Nifty, we had seen some sort of a nervousness in the initial hour yesterday. It had been underperforming from the past few sessions, but then again we saw a good up move towards 41,700 levels even yesterday. So overall, the setup is quite positive even in the banking counters, and the index might touch 42,000, 42,250 levels with a support near 41,250 zones.
Right, so those are the levels to watch out for on the bank as well as on the bank Nifty as well as the Nifty. Also want to get in your thoughts on the IT index, Shivangi. Yesterday we saw a good run on the IT index, and of course this year it has been outperforming the index as well. The Nasdaq also ended in the positive yesterday. So do you expect this rally to continue, and what should one do with these IT names like Infosys, HCL Tech and TCS going forward?
So IT has definitely given a comeback, and we've seen that the momentum has been carried over since the January series. And looking at the chart structure, it is holding quite well above its key exponential moving average, and also forming a good trend line, upward sloping trend line. So overall, the setup is quite positive for the entire index. Now, talking about few stock specific names. I feel emphasis is one such stock here, which is quite positive and resilient in this market. It has been making higher lows from the last 7 weeks. Daily, it is holding on quite well, even despite slight market weakness and the India VIX soaring. But then again, the overall chart structure is quite positive, and we expect 20 to 30 zones over here in the coming few sessions with a stop near 2110.
Right. I also want to get in your thoughts on Apollo Hospital. The numbers came out yesterday, and they managed to miss analyst estimates. And if you look at the stock yesterday, it was down somewhere around 2.5% in trade. Would you advise investors to buy on dips? What are the charts saying about this one?
So Apollo Hospital, weekly we've seen quite a breakdown over here, and it did kind of try to negate its lower lows, but then again we saw that it is unable to hold at higher zones. Daily, if we look at the chart structure, it is giving from the last 2 sessions. It is quite in a lot of weakness. We could see some sort of a more dip over here. The crucial support over here would be 4130 levels. So we could see a little dip towards those levels, and then one can utilize this levels for buying opportunity. Because overall, the if we talk about the stock, it is quite strong. So we could utilize the dips to further add the stock.
Right, buy on dips is a strategy on Apollo Hospitals. ONGC also reported its numbers. Even though profits jumped somewhere around 25% or thereabouts, it still came in below analyst expectations. And the crude oil realization was also up 26% on the back of higher oil prices. What are the charts saying for ONGC? What should one do with this counter?
So we've seen that ONGC has been making higher highs, and the supports are gradually shifting higher from the last 6 sessions. And a good support was taken near 140 zones, and then thereafter we saw a good run up in the last 1 week. Even weekly, it has held on to its support zones and giving a positive trigger over here with a positive divergence in the RSI indicator as well. So definitely the stock is positive, and we could expect 154 odd levels over here with stop near 145.
Right, so those are the levels to watch out for on ONGC. Let's now shift focus and take some viewer queries that have been trickling in. Rishi Ranjan wants to know your views on ICICI Bank for the long term. Given the fact that most of these private banking names have reported pretty strong set of numbers in the quarter gone by, which one would you prefer at this juncture, Shivangi? Vis-a-vis an HDFC Bank or an IndusInd Bank, how does ICICI Bank stack up?
Definitely, ICICI Bank is one such name which is quite strong, and it is one of the most heavyweights of the banking index. And the kind of range breakout that we are seeing in the counter right now, it is quite positive. So one could definitely accumulate this stock, and it's a good level to now start accumulating because it recently took support near 800 odd levels near January end. So a good setup and good levels to add in. We could expect 900 levels over here with the stock near 850.
Right, so those are the levels to watch out for on ICICI Bank. The next query comes in from Harry Singh, and he has a query on Ambuja Cements. He wants to know your outlook and target for the counter. Now, if you look at the cement names, most of them have seen input cost pressures. They haven't really managed to meet expectations when it comes to their third quarter performance. So going forward, Ambuja Cements, should one look at accumulating this one, or is it time to stay away from some of these counters?
I'm sorry, I won't be able to answer on this counter.
Sure. No worries. Let's move on to the next one then. Tata Power is a stock where Mohit Chand has a query, and he wants to know your long-term outlook on the stock, Shivangi.
So looking at all the power and companies, we've seen that there was a little bit of a run up, but then again it could not hold at higher zones. Even we've seen that the global factors have had a very big impact on these counters as well. Looking at Tata Power specifically, we've seen that the stock has been in kind of a range bound to negative bias from the last 6 to 7 sessions, and we could see some more of a dip over here, but then again not much of a weakness over here, and then we could expect the stock to move upwards again. So 195 levels would be an important level to watch out for an up move from here to around 210 levels.
Right. The next query comes in from Naresh Obula, and he wants to know your thoughts on Devyani International. Now, if you look at the stock, it has shed somewhere around 3 to 4% over the last 1 month. How does this counter stack up versus, say, a Jubilant Food going forward?
So looking at Devyani International, we've seen that the stock is trying to turn from 148 levels. So, but then again, the stock has been in weakness from the last 2 to 3 sessions. So 148 would be a crucial level to watch out for. If it takes support here again, we could accumulate this stock for up move near 158. But then again, 148 would be an important level to watch out for. Now, comparing it with Jubilant Food, we've seen that Jubilant is comparatively stronger than that, and weekly somehow it is trying to hold, and we've seen that it is trying to make higher highs on the weekly frame after the negation. So definitely, Jubilant Food chart structure is better placed than Devyani International.
Well, Jubilant Food looking better on the charts vis-a-vis Devyani International. Let's also get in your another query on PI Industries. Neeraj Garg has written in, and he wants to know your views on this stock. Now, this stock has been in a downtrend at least over the last 1 month or so. What kind of a strategy should one adopt on a stock like PI Industries?
So looking at PI Industries, we've seen that the stock has been, an underperformer from the last 3 months. So we've seen quite a downfall over here as well, and the stock has not been able to gain strength and momentum. So my view would be that we could avoid this stock and move to better sectors and better stocks.
Avoid PI Industries and move to a better stock or a sector. I want to get in your thoughts on Bata India, Shivangi. Numbers were unenthusing to say the least, and the profits grew 15%. That was still below analyst expectation. Now the stock has been in a downtrend. In fact, over the last 6 months, it has shaved off somewhere around 24% or thereabouts. What would your call be on Bata? Should one look at buying on dips, or should one avoid completely?
So Bata has been, doing well from the last 6 years, but this is the first year that we are seeing that the stock is, going into weakness. Even on, monthly frame, if we see that the stock has been making lower highs from the last 6 months. So somewhere or the other, the momentum has, not been there in the stock, and it is, trading in weakness. But my suggestion would be there are better consumption and FMCG stocks which one can move to for trading and investing.
Staying with consumption, then, how does Tata Consumer look on the charts now, Shivangi? We have a query on this from Manish Khedkar.
So Tata Consumer has been continuously making lower tops, lower bottoms on the weekly frame, from the December, mid-December. So somewhere the stock is in weakness, and it has not been able to hold on to its support, which is around 730 levels. So the stock has broken those levels, and we could see a little more downside from these levels, then again for an up move turnaround.
Right. The next query comes in on Bharat Forge. Uh, the company recently reported its numbers, and as far as the numbers are concerned, they weren't really they were pretty weak. What kind of strategy should one adopt on Bharat Forge? This query is coming in from Vijay Bhatia.
So looking at Bharat Forge, we've seen that the stock is quite strongly placed on weekly and monthly frame. Now, if we talk about the technicals, yesterday we did see a little bit of a dip, but then again, the last two trading sessions we've seen quite a lot of volume. Now, the concern is that on Monday it made sort of a long-legged doji and closed a little tad bit lower at the lower end. So somewhere the weakness had started from Monday itself, but then again we've seen that the stock is quite positive. The sector has a tailwind, so we could see some more weakness over here. But then again, the stock would bounce back to 905 odd levels with a stop near 856.
Right. Very quickly, the last query for today is coming in on ITC. The stock is in an uptrend, and in fact, it is hovering around its 52-week highs. How is ITC looking? Would you advise buy on dip strategy on this stock now?
So ITC is one such counter which has been strong despite the market wins and turbulence. And despite the low volatility India VIX, we've seen that this counter has done quite well. And now, if we look at the monthly frame, the stock has given a range breakout on monthly frame, so we could expect a bigger up move over here. In fact, ITC was one of my picks for today, so I'm going to talk about it. It has seen 24% open interest addition in this series so far, with longs being built at every small decline. So definitely ITC is a buy even at these levels, with a target near 395 levels and a stop near 373.
Right, ITC was one of your picks for today. What are the other stocks that you're recommending for viewers today, Shivangi?
So other picks include HAL, which we've seen that it has taken a very good support near 2350 levels, and we've seen a good run up from those levels. Weekly, it is turning around, and it is getting prepared to come out of its range. So quite positive stock, and even the global factors are quite positive for this sector as a whole. So we could recommend, we are recommending a buy over here with a target near 2560 and a stop near 2420 levels. My second pick would be on the heavyweight Reliance. We've seen that the stock has bottomed out quite well. And in this series, we've seen that short covering move can be seen. So open interest of 18%, which was on the short side, can be seen covered. And fresh longs are being seen, which are built up at these levels. So a beautiful bottom out level over here, and a perfect risk reward at these levels. So recommending a buy with a target near 2470 and a stop near 2330 levels.
Right, so ITC, Reliance and HAL are the stock recommendations from Shivangi for this morning. Well, with that, Shivangi, thanks a lot for taking out time and joining us and sharing your thoughts with us this morning. Well, to all our viewers, if we couldn't take your queries today, don't get disheartened. We will be taking up tomorrow as well. So keep commenting on our live feed as we bring you the show. With that, it's a wrap on this edition of Morning Trade. But don't go anywhere because coming up next is Opening Bell.